Hello traders, welcome on a daily analytical report with Alpari. My name is Tomasz Wiśniewski, I'm a chief analyst in Alpari Research and Analysis. And finally, we are here. We are ahead of non-farm payrolls data. Chances for rate hike in March are around 100%. So data, today's non-farm payrolls are not so influential as they usually are. In addition to this, a very high number is expected, right? We were expected around 190,000 jobs. It's also these expectations are also higher due to the very good ADP report, which was shown on Wednesday. Today we are also under the influence of yesterday's ECB press conference, which was actually very boring. No details. Market sees that conference is slightly more hawkish than expected, so that is why we can see euro going a little bit higher. But it's not a significant movement. It's not a huge volatile movement as it usually is after ECB. So no game changer here. What we do have also what we also do have today are much weaker commodities. Oil is trying to rebound after this sharp drop, but for example gold and silver are going lower and lower and lower. There's no signs for a possible reversal. We broke very important support, so the buy sentiment, the buy signal which was present till the beginning of the year is completely wiped from the screens right now, so there's no buy signal on gold or silver whatsoever. I will show you now the macro calendar. What I would like to also tell you is the sentiment on stocks, which is very positive. Yesterday American Stock Exchange, S&P 500, Dow Jones, all those American indexes managed to end the mid-term bearish correction. On most of the indexes, the price is going higher, sharply higher. It also can be seen today on leading European indexes, also on those emerging markets, currencies, indexes. But I would like to show you a very interesting situation. This article from today from the Wall Street Journal, that insiders, high-level managers, CEOs of companies listed on New York Stock Exchange are very pessimistic. The ratio of company executives buying shares to those selling has went down to 29 years lows, as you can see here. So buyer-seller ratio, there are significantly more sellers than the buyers, and this state wasn't present since the last 29 years. Well, it was present, but not in such a big scale. So we have many insiders selling. They are not buying. They have the data, right? They are insiders, so they have the data. They can easily estimate if they will have a profit or loss. And as you can see, they are not very optimistic about their companies. Okay, macro calendar. So what we had here was data from Germany, which is using weak euro for their benefits. So exports is doing much better, trade balance is much better than expected. And also we got the data from Great Britain, which came worse than expected. That is why British pound is losing today. But we are all waiting for the non-farm payrolls, which will be shown in hour and 25 minutes, and also the same pack of data from Canada. As we are on Friday, so let's see what should we expect in the forthcoming week. On Monday we have a speech from Mario Draghi, Tuesday, relatively empty data from China, which will be published before the European session will open, and this should set the sentiment for the European shares. Pack of data from Germany and Eurozone. On Wednesday, what do we have on Wednesday? Is pack of data from United States with retail sales, very influential data, also CPI, and this interest rate decision, which is almost certain that Fed will rise interest rates. Obviously, we also would like to see today's non-farm payrolls, but with a nice non-farm payroll data, we should get a rate rise on Wednesday. Also, we do have a press conference, which not usually happens when there is a rate decision, but this time we do have a press conference. And most probably, Fed members will will explain why they hiked interest rates. On Thursday, pack of data from Australia, also GDP from New Zealand, interest rate decision from Japan, interest rate decision from Switzerland, interest rate decision from Great Britain. So you can see that Thursday will be all about interest rates. We'll still be under the influence of decision from United States, and we'll get 4 interest rate decisions on Thursday. So very, very important day. Expect a lot of volatility and a lot of trading opportunities on Thursday. Friday, we will be able to slowly digest the situation from Thursday because we don't have any influential data. With that being said, let me show you what's happening on the charts. We'll start with this account on which I do have commodities and indexes. So oil is edging lower. We broke 2 Fibonacci levels. As you can see, we are now below 38.2 Fibonacci level, and the price tried to retrace, but sellers keep the price relatively low. The sentiment is definitely positive. We'll see how the correction will develop, but most probably we should see another lows anytime soon. I'm not telling you that the price will drop here, but what we should see now will be just a correction. It depends what traders will do, if it will be a rectangle, for example, or it will be a flag or a wedge. But the price in general shouldn't go back above 23.6, even if it will be a sharp. I think that's the best possibility for them to go to 23.6. I don't think they should go any higher. Most probably OPEC countries will try some verbal interventions on the market, but we'll see. DAX very optimistic. They finally defended this trend line, and as I was telling you, don't go short here or here or here. The price was going sideways. That's why we marked a good place for a pending order here below the support. As long as the price was above the support, the sentiment was maybe not positive but neutral. It wasn't definitely negative, so there was no point for going short. If the price would get there, that would be an invitation for a short position, but the price didn't. So price action again saved us. The price broke the upper line of the correction and should now aim for local tops. The sentiment is positive. The price should be edging higher. S&P 500, we can see how they defended this horizontal support here. They are very strong because they were not even bothered to go to this horizontal support. They retraced earlier. the price created long tail, and this long tail was a beautiful buy signal here. As you can see, beautiful hammer, which ended with this candlestick, after that a bullish gap and a beautiful upswing. Now we're witnessing a beautiful upswing. Midterm resistance of this correction was broken, and the buy signal is back on, which is not a surprise. We're telling that for a long time, that you really need to have a strong grounds to go against the trend, because that's what's happening on stocks. Is well, for me it's a kind of a bubble, and you only want to go against the bubble once on top, right? But so far we do not know where the top is, and going against the bubble is very, very risky, because once you will go against the trend, you will get stop loss straight away. That's how it works. So if you want to go against the bubble, you need to wait at least for a needle coming to a bubble, or wait for the pop. But then you have to be very fast. But so far, I don't know, price will probably make a second high after double top formation. Maybe we will be able to see a retracement. Why not? Why not? Okay, now we can log into the account with currencies. Let's start with silver. Why not? So as you can see, this downswing is very, very strong. I would say brutal. They stopped, well, only on the trend line. After that, they broke all the important Fibonacci's and neckline here. So this downswing is very brutal. Okay, wait a second. All right. Are there signs for a reversal? Those long tails and small bodies on top. Well, after such a strong drop, I don't think that this trend will just reverse just like that. That can be a trigger for a correction, right? But that's not how the trends are reversed. For that, we need to see a proper pattern now on a daily chart. But that's a potentially place where the price can retrace, where the price can perform an upswing. On gold, do we have a similar pattern? Well, on H4, yes. On the daily chart, not so much, but on H4, it looks promising. It's a hammer with a bullish engulfing after that. But again, it's also just a potential pause for a correction, then a reversal. Here, the sell signal was created once the price broke the green area and then defended that as a local resistance. Since then, the sell signal is present here. You just have to deal with that and trade what it is. Australian dollar to American dollar. Here, we broke the midterm trend line, downswing, correction, downswing, and most probably we're witnessing a correction here right now. So we do have this line. Maybe use red color as the previous correction here. Once this red line will be broken, that will be an invitation for another downswing, which should lead to 50% Fibonacci level. So that would be a downswing of 50 pips, at least 50 pips. But again, we have to wait for that. Most probably the price will touch the trend line here, break the lower line of the correction and will go lower. Euro to Japanese yen, we are very happy with the outcome of this situation here, because we are highlighting a possibility for an upswing somewhere here where the price formed this inverse head and shoulder formation and broke the upper line of the wedge. After that, we made a small correction here, a small side trend. After that, we break this resistance, and now we're trying to break the upper line connecting recent lower highs. Right, so that was a wedge here, but that's also a wedge, a bigger wedge. But in addition to that, look at that. That's very interesting. If you have a left shoulder head and right shoulder, and at the same time, what you have here is the left shoulder, there is a right shoulder, and there is a head. That's an interesting situation that inverse head and shoulder, head of the inverse head and shoulder formation is also created with inverse head and shoulder formation. That does not happen very often. With this being an inverse head and shoulder formation, that is a neckline, we most probably should see a price touching this resistance and most probably advancing higher and higher and higher. Because that's a very good wedge ending with an inverse head and shoulder formation. It's a long, it's a good buy. It's a good opportunity to go long. American dollar to Mexican peso. Mexican peso is trying to come back to the recent trend. The price, well, it's a different scale. But if we would look on a daily chart, on an hourly chart, that would be the trend line here. So trend line wasn't broken. As long as the trend line is not broken, the sentiment is still negative. Canadian dollar to Swiss franc. What do we have here is after the breakout of the symmetric triangle formation, the price broke also horizontal support, but they stopped on another support created by those lows from the end of November and from the end of December. How it looks on the daily chart. It looks like if the support will be broken, that will be a trigger for a further downswing. So far, there is no sell signal here. As long as we stay above this horizontal support, there's no buy signal. There's no sell signal, but once this support will be broken, that will be an invitation for a short position. But most probably with this bounce, it's kind of V-shaped retracement. We will see a comeback somewhere here. And after that, maybe they will try to break this support again. Euro dollar, the most popular instrument. What do we have on euro dollar is the side trend which started at the 17th of February. And the price tested this horizontal resistance once, twice, 3 times, 4 times. Tested the support twice. And as you can see, what's that is inverse head and shoulder formation. Inverse head and shoulder formation, which potentially ends this correction. But for that, to be more, well, you never can be sure. But to gain a little bit of certainty, we would need to see a breakout of this horizontal resistance here of this orange line. Once we'll have a breakout of this orange resistance, we should see the price advancing higher to 100. We should see price advancing to 100 pips higher. Right? It looks promising. It looks promising, even despite the fact that the price is now locked in a sideways trend. So the odds should be more or less even. 50% for an upswing, 50% for a downswing. I think that the odds are slightly bigger for an upswing. Why is that? Because we do have this inverse head and shoulder formation. We are aiming the resistance right now. And also from the fundamental point of view, if we gather that all together, look, Donald Trump and his administration was saying that American dollar is too strong. And German administration was telling that, well, actually, yeah, euro is too weak. It should be stronger. It's even contrary opinion to the German interest, right? They are benefiting from weak euro because they are focusing on exports. So weak euro is helping them. But in addition to this, they are also telling that yes, euro can be undervalued, and some of them, some of the politicians, German politicians, are mentioning about Deutsche Mark, maybe a big comeback to Deutsche Mark, and that Deutsche Mark would be much stronger right now than euro is. And in addition to this, well, look, the rate hike is in March. Chances for rate hike are almost 100%. So it should be already discounted, right? And if there won't be a rate hike, the price will spike. And also, if there will be a rate hike, buy the rumors, sell the facts, right? So euro dollar can also go higher. So that's an interesting approach, which was good not once, not twice, but happens very often. So we're waiting for a signal on euro dollar, but we do have a signal on euro to British pound. What signal do we have as a symmetric triangle here? It was head and shoulder formation for some time, but sellers failed to break the neckline. Also, they failed to break the long-term uptrend line here. So there was no breakout here, which created a chance for a reversal, and buyers used this chance. They broke the horizontal resistance, which I will show you in the midterm. They broke the horizontal resistance, they broke the trend line, and the price was advancing higher and higher and higher. Now it's a little bit too late to enter the market because you would have to place stop loss somewhere here, 120 pips lower, and you would get 120 pips from this movement. So it's more or less one-to-one, which is actually not a very good idea. But if, for example, the price would go a little bit higher, and you would place stop loss, you would buy somewhere here with a stop loss somewhere here on 50 pips, then 180, that would be possibly a very good trading opportunity. Canadian dollar to Japanese yen finally showing what I was thinking that will happen. So after the upswing, we had a nice bounce from this horizontal support. The price advanced higher, then went lower, created, in my opinion, false breakout. And after that, we had a small upswing. I thought that this upswing would be much bigger, more significant, but they failed to pull the price higher. The price was more or less in a side trend, but finally they defended this horizontal support. They broke the upper line of this correction, and they sent the price higher. And actually, as you can see, we are on a weekly highs, and we are trying to challenge the highs from the last week, which creates a very bullish situation here. New Zealand dollar to American dollar, after such a strong drop, the price has stopped. They didn't try to stop here. They stopped a little bit higher, but for me that's not a reversal. We may see a try here, maybe a double bottom formation. We will see, but that's just a pause in a downtrend. It's, in my opinion, it's not a reversal. American dollar to Canadian dollar. What we're having here was a try to create a shooting star, but again, it's too early. I would love to see this kind of a shooting star here on this upper green area, which is an important resistance. If I will see a trend reversal pattern here, so a price pattern like head and shoulder formation or double top, or a candlestick pattern like bearish engulfing or an evening star or a shooting star, I would consider opening short position here, like a shooting star somewhere here or a kind of an evening star here. Not fully an evening star, but still kind of good looking pattern which gave a signal for 450 pips. Australian dollar to Swiss franc. After this head and shoulder formation was made, the price went lower. Now it's just a typical comeback to the neckline, actually, which creates a chance for to open new short positions. Actually, I will think about that. What do we have here is local support. Why not? Why not? Opening short position here would not be a bad idea, but not now, maybe a little bit higher. Because now we can see those long tails are showing us that most probably the price will try to go higher. But yeah, I will leave this chart as a potentially nice trading opportunity in the near future. Australian dollar to New Zealand dollar, you know the situation, inverse head and shoulder formation. After that, we got a breakout of the neckline. After that, the price tried to challenge the trend line. Challenge was quite successful. As you can see, we are now above this horizontal support, and actually it's a good trading opportunity as well, right? Even despite the fact that this upswing was very strong, this horizontal support seems a good place for a stop loss order. This is a resistance, so once we will be able to break this resistance, the price should advance higher. So potential stop loss should be around 25 pips. First target is 45 pips. And maybe higher. So actually this is potentially a very good trading opportunity. American dollar to Polish zloty. I'm waiting here for a breakout of, well, not for a breakout, but for a proper bounce from this 38.2 Fibonacci level. On hourly chart, you can see that we're more or less in a side trend yesterday. We are trying to break this level one more time, which was unsuccessful. So, at least in theory, the price should go lower right now. Right, let's wrap that up and see where we do have trading signals. We do have it here on Australian dollar to New Zealand dollar. We do have it here, not now, but potentially very soon. We don't have it here, don't have it here. We do have it here, a long position here as well. Here we are waiting for a proper trading signal which should emerge once the resistance or support will be broken. Here nope, here no. Or American dollar to Mexican peso, this bounce from a trend line, it's just a bounce from the trend line. So no, and on indexes we don't have, maybe on Brent. Also, I don't think I mentioned New Zealand dollar to Japanese yen, because yesterday I marked the possibility of a retracement here. I told you that they shouldn't reach this support straight away, but first they will try to make a correction, and it's happening. And look, most probably the correction will reach a very important horizontal resistance and a trend line at the same time. Broken support becomes a resistance, there also will be a trend line, so here will be a possibly very strong place for a reversal. I also will leave this position here, this opportunity here, and we'll see what the price action will show us when the price will get to this orange areas. So far the price, we do have 60 pips to that. Price getting here would create a nice trading opportunity in terms of risk to reward, because for example we would have like 70 pips stop loss and then 230 pips profit, which makes it 3 to 1, 4 to 1. A very interesting risk to reward ratio. Okay, guys, thank you very much for watching daily analytical report. Remember that trading and investment in financial markets, in markets in general, involves an element of risk. And if you want some more trading setups, follow us on our Twitter account and our website alpari.news. Thanks very much and goodbye.